with that.
Okay, let's. So you are all clear with basic EPS.
Basic EPS, from what I've understood, is net income minus any kind of dividend we have for income, and then for weighted average, the example we discussed, I understood that. I have yet to do any reverse stock split kind of example. So, but apart from that, in diluted EPS, I think that's the main problem.
So what is EPS? What you have understood conceptually?
And
What is EPS?
uh, the the total earning per share from our net income. We take the whole income and per share.
Per common share, not per share, per common share. So let's say you have a capital structure in the company and you have common stock, preference stock. So what EPS shows, suppose company has earned $10,000 in a year. So per share, what is the amount each common stockholder have earned? That is represented by the EPS. Now, let me share my screen. It's not all the dividends you remove. Let me just. So what happens in case of EPS? So we say net income divided by weighted average common stock
Uh,
outstanding for the.
can you share your screen?
Oh, sorry. So net income divided by weighted average common stock which are outstanding. Now net income, this is the net income available for common stock. Now, what is the formula for net income for common stockholder? It means your net income, you further less two things. Number one, a dividend which is declared on non-cumulative preference shares, less dividend for cumulative preference shares, into a bracket, whether declared or not. And then you get net income for common stockholders. Now, first of all, a small concept, what is the difference between dividend declared and dividend declared or not? So, non-cumulative preference share, these are those preference shareholders who gets dividend only and only if it is declared by the company. So suppose in year one, we did not declare any dividend. So non-cumulative preference shareholders do not get any dividend in that particular year, neither they get dividend in future. Let's say year two, dividend is not declared. Again, they don't get anything. Let's say year three, we declared the dividend for non-cumulative preference shares. They only get dividend from the earnings of year three. So it is called a non-cumulative preference share. You subtract the dividend only and only if it is declared by the company. However, when we talk about cumulative preference share, it means whether you declare the dividend or you do not declare, you have to pay that. And you have to pay in the year when you declare. Suppose year one, company did not announce the dividend. That's okay. You don't have to pay in year one, but there is a accrued liability is created. So in future you have to pay. Let's say in year two, company did not declare the dividend. That's okay. In year two, you don't have to pay, but again an accrued liability is created. So someday in future you have to pay. Now let's say in year three, company declared and paid. So they have to pay not only year three, but year one plus year two outstanding dividend as well. So when it's a cumulative preference share, the word suggests cumulative. It means accumulation happens for the unpaid dividend. So for cumulative preference shares, you have to subtract the dividend whether it is declared or not, because preference shareholders have the right to dividend from the net income, whether company declares it or doesn't declare it. But for the non-cumulative preference share, the preference shareholder gets the dividend only and only if it is declared by the company. So you have to subtract this two type of dividend and then you get net income for the common stock holder. Is this clear to you?
So if it's non-cumulative and it's not declared, then we won't subtract anything.
Exactly. Then you won't subtract anything.
Okay.
Okay, that is the first concept, how a net income is calculated. Second, the denominator, weighted average common stock. So you just have to do a mathematics that a stock was outstanding for how many months in a year, and just you have to calculate a weighted average number of share which were outstanding for that particular year. So basic EPS all clear to you?
Yes.
Okay, let's talk about the diluted EPS part now. Suppose you just think you are a shareholder in a one company, and let's say you are owning the 100% share right now, and the company, let's say you are X Corporation is the company, and there is a common stock. Let's say Sad is owning the common stock. You have 10,000 shares at one par each. So you have a total common stock in that particular company of $10,000. Now let's say S Incorporation has following income statement. So company has on the gross revenue of $50,000. Just put in number formats. Let's say company had the expenses of $20,000 and company had the interest paid on convertible bonds, let's say 10,000, and then they had a net profit before taxes. Let's say company paid the taxes at 30% rate. So company paid taxes of $6,000. So the net income after taxes were $14,000. So what was your basic EPS in this particular situation? Income which is available for SAD, $14,000, divided by number of shares which are outstanding, 10,000. So we can say you are earning $1.4 per equity stock or a per common stock which you have invested. So this is called a basic EPS. Now, when diluted EPS is applicable? So first question is when it is applicable. So it is applicable when a convertible security is issued by a company. Now, what is meaning of convertible security? So today the item is a liability for the company, but tomorrow instead of repaying the debt, company will issue them a equity share or a common share. Let's take a simple example first, a bank loan. Let's assume X Incorporation has taken a bank loan of $5,000. So in future, X Incorporation will require to repay that loan, but X Incorporation will not repay in cash. Rather, X Incorporation will issue the common stock. So it is called a convertible debt or a convertible loan. It means in future that particular debt will get converted into the common stock, and in future now you have a two shareholder. One is a SAD and one is a bank. So it is called a convertible security. So in that example, what we saw, he currently SAD is earning $1.4 per share. But if a bank also becomes a shareholder, what will be the dilution in the SAD's income per share? So if SAD's income per share increases from 1.4, then it's all good. It is called anti-dilutive EPS. You don't report it. But if SAD's income per share goes below 1.4, then it is called a dilution in his income or a diluted EPS. Let's just say, what if a projection? So we do a projection here. What if a loan is converted into the common stock? So let's just assume what interest we have paid right now here. This is not on convertible bonds. This is on the bank loan. And let's just say X Incorporation has taken a 100,000 loan at 10% rate. They will be they will be issued, let's say, 3,000 shares to settle the loan in future. Now let's say projection. What will happen if a loan becomes a common stock or loan liability converts into a common stock? Will say revenue remains the same, no impact. Expenses remain the same, no impact. Interest on loan, you will no longer be incurring that interest in future. So interest on loan will be zero. Why? Because the loan is no longer a loan now. It has become a common stock. So what is your net profit before taxes? They are now 30,000. Now you are paying 30% taxes. So in future you will be paying $9,000 of taxes. So your net income after tax will be $21,000. But now you have how many total number of share? 10,000 owned by Saad plus 3,000 owned by bank. So you total have now 13,000 share. So your next EPS is $21,000 divided by $13,000. It's 1.6. So Saad's income or a per shareholder income is increasing from 1.4 to 1.6. So this is called a diluted EPS. You don't report it. Hypothetically, let's say the bank would be issued 8,000 shares to settle the loan. In that situation, your number of equity share which are outstanding will be 10,000 for SAD plus 8,000 for bank, which are 18,000. So your earnings now reduces to 1.2. This is a dilution in your earnings. So this is called a diluted EPS, and this is also reported on the financial statement. So diluted EPS में हम लोग क्या देखते हैं कि if a convertible loan or a convertible debt becomes a common stock in future, then how your EPS changes. So formula remains the same. Net income available for common shareholders divided by common number of shares which are outstanding. You just do a projection that what will happen in future if a debt is no longer a debt and becomes a common share, and again you calculate the EPS. If the new EPS is lower than the basic EPS, it is called a diluted EPS. You report it. However, if a new EPS is more than the basic EPS, then it is called an anti-dilutive EPS, and you do not report that on the face of the financial statements. Now, does this help to understand the concept of diluted EPS?
Yes.
कोई भी question इसमें?
नहीं.
चलिए फिर let's go towards a new topic, or you want to
नहीं,
solve
मुझे किसी और चीज़ पे क्वेश्चन है. So
yes.
in diluted EPS, you in the book and in your slides as well, there are four different kinds of capital structures: options and warrants, and convertible preferred stocks, convertible bonds, and contingent shares. All of these four things are using different methods. That's where I'm confused. And in some they say to add this, in some they say to do not subtract this. That's where my confusion
Yeah,
is.
which question number? Let's go through one by one. Which question?
So in the option and warrants, you have treasury stock method. Then in convertible preferred stock, you have if converted method. Uh,
So just first of all, don't go through the names of the method. Treasury stock method, we haven't studied yet. You don't need to look at the name of the method. Let's just go with the logics. So let's understand example number 2, converted stock method. So this example is only asking to calculate how many number of share you need to add into your denominator as a weighted average common number of share. So in this question, they are just asking you to calculate your revised weighted average number of share if the share warrants are converted into a common stock. So that is only the question, first of all. Now let's understand this question logically, and then it will make more sense to you. So what they are saying, so first of all, what is option and warrants? So option and warrant means a company is giving you a one-time option in future to purchase the shares of their company at a lower price than a market price, and it is called option and warrant. So again, let's say X Incorporation is giving you an option to purchase 1,000 shares in future at $10 only, because in future the market rate will be $20. And obviously a rational investor will go and will exercise the option because he is getting the stock at a 50% discount. So it is called option and warrant. Now, what are the facts in the example? Fact says that there are 1000 options to purchase the 1000 common shares of the company. Now, in future, the exercise price will be $15. It means you have to pay $15 per share if you want to get these shares exercised. So your investment from your pocket, $15,000, is going out to the company. Now, market rate is $20. Now, let's say I am a common shareholder of the company and you are the person you got the options. What I am saying to my other people in the boardroom, that okay, Saad is coming, Saad is giving $15,000, he is getting 1000 share, but Saad has only paid the money for 750 shares. Now, how 750 is calculated? Saad is paying $15,000, but price in the market is $20 per share. So effectively, he has only made a payment of $750 share. The company is giving 250 share as a free, as a bonus, because of the option attached to the warrant. And hence your number of shares increased are 250, which is effectively a free share or a bonus share which is given by the company to you. So this is how you should read this particular example to get the concepts right. So you are paying $15,000, you are getting 1000 shares in future, but you are only making a payment for 750 shares. It means 250 shares company is issuing for the free of cost, and these are increasing your weighted average number of shares. Otherwise, there is a formula approach, but formula approach, I mean, you don't need to remember so many formula. You just need to understand what are the number of shares, how you need to calculate conceptually.
Okay.
चलिए चलते हैं नेक्स्ट एग्जांपल, प्रेफरेंस डिविडेंड पे. विच एग्जांपल, एक मुझे आप नंबर बता सकते हो?
So next uh, next preferred stock and convertible bonds are two different types. Uh, s-
चलिए एक एक करके वापस चलते हैं. विल फॉरगेट मेथड का नेम. वी
so we
डोंट.
just we just covered this one in your Excel sheet. My question here was that while I was attempting the questions for this, sometimes they would have two different rates, and I don't know which rate to use. Yeah, they would have 9% and 10%. I
Sorry, exactly where, which rates you are talking about? Interest rates?
Yes.
So interest rates will be the rates which are attached to the security currently, because that is the one which is going to be saved in future. Any example you have? Like I need to see that where that example of multiple rates given.
Mm, I'll have to check my questions again, but I did face that.
ठीक है.
Okay.
Anything else in EPS? Again, you don't need to remember the method name. Just follow this particular format which we saw in Google Sheet. What is the projection and what is your new weighted average common stock in future? And you will always get your answers. You doesn't need to remember the methods at all.
Okay. For convertible bonds, we were removing the interest expense and we were adding the stocks. But when we have convertible preferred stock, then what are we doing then?
So now again, let's check the formula. Let's carry on this particular example. Let's forget the interest component. Okay. Now let me get the calculations right. So you have net income, and let's just add few more rows here. Suppose you have a capital structure where the SAD is there, a common stockholder, and let's say let's make it complicated. You have a non-cumulative preference shares. Let's say you have 1000 shares at $1 per each. So you have $1000, and let's say you have a cumulative preference shares, again 1000 at 1 par each, eligible for 10% dividend, and let's say these are eligible for 7% dividend. Now what we are saying, this is the net income after taxes for all the shareholder. For EPS purpose, what we want net income for the common shareholder. How it is derived? Net income, minus dividend for the non-cumulative preference share only and only if it is declared, minus dividend for cumulative preference share only if it is, sorry, whether it is declared or not. Now let's say question says that company do not declare any dividend on non-cumulative preference share. So what we say, less non-cumulative preference share, you don't subtract anything
Mm.
because company has not declared anything.
No, I get these 2 points, but what if they're convertible preferred
I'm coming
shares?
there. I'm coming there. I'm building the example for you. Less, let's say, a cumulative preference share. Company declares or doesn't declare, doesn't matter. So you have $1,000 of cumulative preference share. At 10%, you subtract $100 of dividend. So what is your net income which is available for common stockholders? So net income which is available for common stockholder is 20,900. What are your common number of shares outstanding? It is 10,000. So your basic EPS is 2.1. Now let's say a question says that each non-cumulative preference share will be converted in the ratio of 1:1, and each cumulative preference share will be converted in the ratio of 1:2. So what we are saying, if you have a 1,000 shares of a non-cumulative preference, you will get one common stock. So 1,000 common stock will be increased because of this particular item. And if you have a one cumulative preference share, you get two common stocks. So 1,000 preference shares, you get 2,000 common stocks. So your total equity is getting increased by 3,000 number of common stock. Now in future, your income remains the same till this point. You don't have any dividend in futures because you don't have any preference shares outstanding now anymore. So your income available for equity shareholder is full $21,000. Your common number of shares are 21,000 divided by original 10,000 which you hold plus 3,000 which will be converted into the common stock. So total 13,000 number of share. So now your earnings per share has gone down from 2.1 to 1.6. It is called a dilution in your per share income. So it is called a diluted EPS. You report this EPS on the face of the financial statement. So again, whenever there is a diluted EPS question, start with basic EPS first. Prepare two comparative tables and then see which one is getting out, which one is coming in. Generally, you will have interest going out, dividends going out for the convertible options, and you have a common stock which are getting increased.
Okay.
For your confidence, can you please solve question number 4 in this particular format which we have? And if you get the same answer, then let's move to the next topic. So over to you, example number 4. स्टेप 1 पहले बेसिक गिनना, उसके बाद आप डाइल्यूटेड गिनना.
I got the answer.
Okay, now confident in EPS, both basic and diluted.
Yes, one more thing. There was in your
But
slides contingent shares. What are those?
sorry, where they are contingent shares.
It's in the book as well. At the end, there's no example down at the end.
Okay, so contingent shares are those shares which are
That
issued only upon a certain criteria are met. For example, let's say there are certain number of convertible debt. Now that convertible debt will get converted into a common stock only and only if, let's say, company's income will increase by 35%. Or let's say they say a company's sales increase by 70%. So if a future number of shares will get converted only and only upon the certain condition fulfillment, then it is called a contingent share. Whether you need to take those particular share into the diluted EPS conditions, it is a judgment call. A company evaluates the situation at every year end, and at every year end, they will decide whether this condition will be met or not. If they feel there is a higher probability of all the conditions are getting met, then they can add those particular number of shares into the calculation of diluted EPS. If they feel the condition will not be satisfied at the end of each reporting period, then they may ignore those particular share. A more a theoretical point, practical life may we see a very less number of options which have a contingent options. एक बार क्विकली देखते हैं थियरी क्या दिया है. So they say a contingent issuable shares do not require a cash consideration and they depend on some future event or a conditions being met. So they are also saying the same thing. Future condition needs to be met. Contingent shares are also included in the calculation if all the conditions for the issuance are met. If you feel at the reporting period that conditions are going to be met, then you may include those items into the calculation of your diluted EPS. Again, more a theoretical point. You will not see the example around this area in your CPA exams.
okay.
ठीक है. All good till here.
Yes.
चलिए फिर एक next topic शुरू करते हैं. Let me open the presentation for that. Let's go towards a last topic in your first module, which is your stockholders equity. We will try to cover treasury stock today, and probably remaining of the topics we will cover tomorrow, and then this should be done. Treasury stock, very important, heavily tested in the CPA exam, especially for simulation side. ठीक है. So you have a stockholders equity. Let us create a one view and देखते जाते हैं कि क्या क्या है. So what we are going to cover, we are going to understand the capital structure, what are the various characteristics of them, what is the preference shares, what is the APIC, what is the retained earnings, what is the OCI, then a treasury stock, cost method versus par method. This is very important. And what happens when you what happens when you provide the dividend in other than cash, especially a small dividend versus a large dividend, how the accounting changes for them. Again, a few MCQs you can expect around all these topics. So quite important topic for the FAR 1 point of view. So let's start. So what is the overview? Stockholders equity. So basically what we say that equity is equal to asset minus liability. What all things could be there in your equity? So you can have a capital stock. So capital stock always recorded at a par value. This is a thumb rule. Never forget this. A capital stock or a common stock is always recorded at a par value. Whether you are opening the account or you are closing the common stock account, if you are debiting or crediting capital stock, do always record only at par value. If a transaction has taken place more than a par value, then an APIC is getting created. So suppose, let's say you have a share of $10 par and you have issued at $13. So capital or a common stock will get credited with $10 only. The remaining $3 will be going to your APIC, which is excess of par, which is coming from various transactions. It could be issuance of share, it could be redemption of the share, or it could be any other thing. If anything is going beyond par value, APIC will be always used. Now, APIC can be n number of APIC you can open in your books of accounts. There is no restriction. You can have APIC for capital issued. You can have APIC for retained earnings. You can have APIC for buyback. You can have APIC for treasury stock. So whatever reasons you have, you can open a multiple APIC account to make sure you have a separate presentation classification available for a different class of the transactions. Then you have a retained earnings there. Retained earnings is nothing but your accumulated profits over the year. So basically what you start with retained earnings plus any adjustment to the opening balance, you get some adjusted retained earnings. Now, if you remember during the basic concepts, we understand there is a change in accounting method or a change in accounting policy has a retrospective effect. And if there is a retrospective effect, you need to update or you need to amend your beginning retained earnings balance. So if once we are going to see a format in detail in few minutes, we will see and retained earnings plus adjustment to the opening balance, you get adjusted opening retained earnings plus net income for the year minus any dividends paid, you get a closing retained earnings. Then you have accumulated OCI. Again, OCI we have seen as a pace. There are four transactions, pension available, unrealized gain for available for sale securities, currency translation adjustment on foreign currency consolidation, and I think there is one more. So all these items are your total of OCI. OCI always start with beginning OCI plus addition to the OCI minus reclassification to your income statement. You get a closing OCI. And last not the least, you have a treasury stock. Treasury stock, which means the stock which a company has bought back, always shown as a negative figure. You can have a cost method, you can have a par value method. So both the methods we are going to see. Now, key rule. What key rule says that each element of the stockholder's equity must be clearly classified on the balance sheet. Now, there could be a non-controlling interest. We will park this point right now. We will see during the consolidation. But if there is a non-controlling interest, it is separately presented in the equity section below the stockholder's equity. क्या होता है? Once we go to the consolidation, we will understand. Let's see you have anything to go through in Becker to start as a base. Yeah, okay, this is a typical format. So let's just go through a typical format of a stockholder's equity. So you can start always with a capital stock. Now, as a sequence, you generally always start with a preference stock. So preference stock always gets a priority, all in terms of presentation plus in terms of claims during the liquidation too. So that is going towards the first line item. So you say a preference stock, whether cumulative or non-cumulative, what is the par value, what is the authorized share. So authorized share means company is authorized to issue this many number of share. Outstanding share means what are the number of shares which are already issued and not bought back by the company. So in this particular example, it suggests that a company has authority to issue a 1000 shares. They have issued 500 shares currently, which are there in the market. The value is $50,000. Next is your common stock. So common stock, $10 par value. You are authorized to issue 50,000 share. You have issued 30,000 share, out of which 5,000 are in treasury. So your outstanding are 25,000. 30,000 shares आपने issue किए हैं, minus 5,000 shares are bought back by the company. So net $25,000 share are running in the market. Now, if you see, all these items are shown at a par value. So $30,000 at $10 par comes to 3 lakh. 500 share into $100 par, 50,000 shown as a par value. So common stock, capital stock always shown at a par value. Next is a APIC, which is an additional paid in capital in excess of the par value. You can have various reasons for the APIC. So let's say excess of issue price over the common stock and preference stock. So let's say you have a common value of $100 per share. but you issued the share at 130. So 30 will go as a APIC. Or a common stock, you had a $10 par value, you issued for $14. So $4 will go towards the APIC. Excess of sales price over a treasury stock, we will see in a moment when we go to a treasury stock, but it's the same thing. So 5,000 shares company has bought back. Out of 5,000 share, let's say $1,000 you have reissued again. And when you reissue the 1,000 share, let's say $10 par value, you reissue for $17. So $7 are called excess of price for a treasury stock when they are reissued. And let's say excess of fair market value for a stock dividend. Again, we will see in this particular chapter, we have a small dividend versus large dividend. So when a small dividend is issued above par value, and it is called a stock dividend, and APIC is getting created. So when we see that example, we will see this particular item. If there is any default in the stock subscription and you forfeit that particular amount, goes as a default stock subscription. Any other item which has created APIC, you can represent here in the APIC section. Then you have a retained earnings. So retained earnings for the general contingency, retained earnings for the future events, expansion, XYZ reason. And then if something is not appropriated or reclassified, and it is called a general retained earnings or a unreserved retained earnings. Again, a separate various presentation into a same category. Then you have accumulated OCI minus treasury shares at a cost. So treasury shares, we will see a what method we can use, either cost method or a par value method. So if you total all these things, common stock plus APIC plus retained earnings plus OCI plus treasury stock, you get a total corporation's equity. Non-controlling interest, it is presented as a separate line item. What is this? We will see during the consolidation chapter. So total corporate equity plus non-controlling equity, you get a total equity which is outstanding for a company. A typical format how a capital account or a equity account looks like into any corporation. Just a format. We have not gone into a detail of anything
You
of
you
this.
you gave a question for this in the exam.
That is expected, and I will keep doing this because a surprise element has to be there. Again, in exam, it will happen. Whatever syllabus you have covered, you will see only 85 to 90%. 10% will always come from the outside. So you have to learn the logics as well, which are the fundamentals of accounting, and then try to see what is the best possible answer for those surprises. So again, in the future exams, I'll make sure that if it's a 100 mark, at least 10 to 15 will be out of syllabus, which you have not seen till that particular sessions. ठीक है, चले आगे. Let's understand little bit more about capital stock. So what is capital stock? These are the common stock. These are the key things. These are the owners of the corporation. Now you can have authorized share, you can have issued share, and you have an outstanding share. So what is the authorized share? The authorized shares are those number of shares which are issued by the corporation at a highest level, or which can be issued by the company at a highest level. Beyond this, company cannot issue any further share. So it's a maximum, a limit, a ceiling limit which a company can issue the share. It is called an authorized share. Issued share, it means how many shares are actually issued by the company, distributed to the shareholders. Always issued will be lesser than the authorized. Outstanding means as on date, how many shares are actually running in the market by the company. So let's understand. Let's say a company has $10,000 of shares which are authorized. Out of 10,000, company has issued 9,000 shares. But out of those 9,000, company has taken back $1,000 of share. So now in market, only $8,000 of shares which are running. So it is called outstanding number of share. Now, if you see the box sizes, authorized as a biggest box, issued a slightly lower than authorized but higher than outstanding, and outstanding has the smallest box. So in terms of number of share, authorized will be the maximum, little less issued, little less outstanding. So what is the formula for outstanding number of share? It means total shares which are issued by the company minus shares which are taken back as a buyback or a treasury stock. Now there is a note here. Let's quickly see what is the note. Capital is always recorded at a par value. If you receive any amount above the par, EPIC is created. What sort of disclosure you required? What is the number of share authorized? What are the number of share issued? And what are the number of share which are outstanding for each class of the share? Again, let's going back to the presentation here. What we have seen authorized. Yes, we have seen issued. Yes, we have seen outstanding. So three disclosures are required for a common stock and a preference stock. So let's quickly go through the capital stock section 2. I want you to spend 5 minutes of time and let's just quickly go through this page. कोई question है तो आप मेरे को पूछ लो.
What does it mean common stock may be issued without a par value?
Generally, it is not allowed to issue without a par value because when you have a authorized number of shares, you will have a value and a quantity at a par value. But if the company has not decided yet what will be the par value, subject to the board of directors approval, for a temporary basis, they may just issue the shares to the promoters and the initial directors, but they have to ratify this decision. So again, yes, as a legal exceptions it is allowed, but not in the long term nature. They have to ratify this particular decision. Example, let's say आपने आज एक company शुरू की, you are the sole owner of the company, you have not decided what will be the par value of your share, but you are not stuck with the legal formalities. You just go with the opening the bank accounts and other formalities where you are the shareholder, you have not shown the par value. But in future, within next 3 months, 6 months before next board meeting happens, you have to ratify that decision. You have to decide the par value and you have to issue the ratification to all the concerned parties.
Okay. I've completed the rest.
चलिए आगे चलते हैं. A formula, what is the book value per common share? Again, a mathematical formula. So what we are saying, a common share means only a equity share. What is the book value? So what we are saying, what is a common shareholders equity divided by common number of shares which are outstanding. Let's just see in this particular example, what is the common shareholders equity? Assuming that we don't have anything else given on the below side of the question, we just have the first section here. So common shareholders equity are $300,000 divided by number of common stock, which are 30,000 minus 5,000, so they are 25,000. So 3 lakh divided by 25,000, it comes to 8. So $8 is a equity or a book value per share for the common shareholders. So again, what formula says book value per common share is equal to what is the total common shareholders equity divided by how many number of common shares which are outstanding. अच्छा, कॉमन शेयर होल्डर्स इक्विटी आप निकालते कैसे हो? सो यू टेक अ टोटल शेयर होल्डर्स इक्विटी माइनस यू सब्ट्रैक्ट अ प्रेफर्ड स्टॉक वैल्यू माइनस cumulative preference dividend in arrears. Important one. What is the meaning of this? अभी हमने देखा EPS के टाइम पे, if a cumulative preference shares are there, you have to subtract the dividend whether it is declared or not. So what you say, what is the equity is called total shareholders equity today? So total of your equity section of the balance sheet, just remove the preference shares and remove any dividends which is in arrears for those shareholders. You will get a common shareholders equity as the amount. And on the denominator side, what you say a common number of shares which are outstanding. Important word is outstanding, not issued. Outstanding means currently कितने shares market में है जो income generate कर रहे हैं. Clear with the formula? One very simple basic formula. I don't expect a questions around
Yes.
this, but important to understand. Just quickly go through 2.4. We have done this now multiple times. There is a cumulative preference share and non-cumulative. I'll help you out what is participating, but just go through the first two ones.
Done.
ठीक है. Now, what are the participating preference shares? Participating preference share means they have a right to participate in the excess profit of the company. Let's go through and Google sheet and understand with one simple example. So let's just say participating preference share. Let's say a company has a common structure and they have a common stock. Let's say 1,000 numbers. I'm just putting number of shares, par value, and amount. Let's say they have a $1 and they have a $1,000. And let's say they have a participating preference shares. And let's say these are 100 number of share at a par value of 1, so total value of 100. Now, these participating shareholders are eligible for 10% dividend. So what happens? Suppose a company has earned a net income of $5,000 during the year. So you less a preference dividend. What is the preference dividend? 100 is the total value into 10%. You reduce, your value is 490. So typically this would become income available for the common stockholders. This is a normal scenario. But you have a participating shares. It means this preference shareholder, they have right not only on this 10%, but also the excess earnings of the company. So how you calculate the excess earnings? So step number one, calculate the dividend for common stockholders at the rate which participating shareholders are getting it. So can I say participating shareholders are getting 10% of the dividend? So what is the dividend which common shareholders will get in the step one? So common shareholders have the value of $1,000 into 10%. So they are eligible to get $100 of dividend. So what is the income available for participation?
So why are common stock getting 10%?
So, okay, coming again there. So what we are saying, participating का मतलब क्या होता है कि excess earnings जो भी होगी उसमें common shares and preference shares दोनों का हिस्सा होगा. So first of all, we need to identify what is the participating income. So what we are saying that preference shareholders are getting 10% dividend. So let's treat common stock also with the same rule first. उनको भी पहले 10% dividend दे दो. And then let's bring both the parties apple to apple. So participating shareholders ने $100 invest किया था. So at 10% they get a $10 का dividend. Equity shareholders और common shareholders ने भी $1,000 का investment किया था. Now in a common world, if this were not a participating share, तो सारा 4,990 जो है वो equity shareholder का हो जाता. But because this is the participating item, what we are saying कि पहले इक्विटी वालों को भी 10% दे दो. So what is the equity shareholders investment? It's $1,000 into 10%. What is 10%? जितना preference share वालों को अभी मिल चुका है पहले आप उतना उनको पे कर दो. And let's bring both the parties to the table at a same level. So हमने क्या किया, जितनी भी इनकम अर्न की थी पहले दोनों शेयर होल्डर्स को 10% दे दी है. वाई 10% दिए? बिकॉज पार्टिसिपेटिंग वालों को 10% मिला एज पर कॉन्ट्रैक्ट. तो हमने क्या बोला कि कॉमन शेयर्स वालों को भी 10% देके उनको एक लेवल पर लेके आ जाओ. नाउ व्हाट इज लेफ्ट? $4,890. दिस इज द इनकम जहां पर दोनों का अब राइट है. वाई दोनों का राइट है? बिकॉज दिस इज अ पार्टिसिपेटिंग शेयर होल्डर. दे विल ऑल्सो पार्टिसिपेट इन द फर्दर इनकम ऑफ द कंपनी. व्हाट इज फर्दर इनकम? दोनों को अपना अपना 10% डिविडेंड मिल गया. उसके बाद भी अगर इनकम बची है तो दोनों पार्टी इसको एंजॉय करेगी. This is the reason why we reduce a 10% dividend for the common shareholders. यहाँ तक clear है?
Yes.
Step number 2, allocate the excess income in the ratio of capital invested. So what is your excess income? Your excess income is 4890. What is the capital invested? You have a preference shareholder and you have a common stockholders. So preference shareholders have invested $100, common stockholders have invested $1,000. What is the ratio? 100 divided by 1,100, 1,000 divided by 1,100. So what is the ratio? 9% and 91%. So what is the excess earnings distributed? So you are distributing 4890 in the ratio of their capital investment, $444 and $4,445. So technically what we are saying, total dividends received. So preference shareholder got a $10 ka dividend from a basic distribution plus $445 dividend as a excess earnings in the company. Equity shareholder got $100 of basic dividend plus 4,445 as a excess dividend. So in total, the company has distributed $5,000 of net income in such a way where first of all both the parties get a 10% dividend on the basic structure, and then whatever income is left, that income is distributed between preference shareholders and common shareholders in the ratio of their capital investments. So 445 due to capital investment, $10 due to a basic distribution, total $455. यहाँ पर $100 basic distribution, 4,445 cap because of the excess earnings of the company, total distribution 4,545. Clear with the concept of participating shares? हो
Yes.
सकता है कि एमसीक्यू आ जाए यहाँ पर. गो थ्रू एक बार थियरी, कहीं पे भी क्वेश्चन हो तो आप मेरे को पूछ लो. 2.4.3.
Partially participating में क्या होगा?
So partially it means they may say that they are eligible only for the 10% earnings in the future only. So first of all आप distribution कर दोगे, उसके बाद आप क्या बोलोगे, जितना भी income बचा है उसका सिर्फ 10% participating वालों को जाएगा, remaining पूरा common stockholders को चला जाएगा. Currently we did example जहाँ पर 100% participation is there. This
So
participation can be 50%, 70%, 10% as per the legal contract.
so we won't calculate the ratio then.
Yes, then you won't calculate the ratio. लेकिन आप क्या करोगे? For example, they say a preference shareholders are eligible for 10% of the excess earnings of the company. So what you will do, you will say 4890 is the total excess. इसमें से 489 जो रहेगा इस पे पार्टिसिपेशंस रहेगा, एंड रिमेनिंग जो रहेगा वो सारा कॉमन शेयर होल्डर्स का रहेगा. बट ये 489 के लिए ये आप पूरा मेहनत फिर से करोगे. एंड व्हाट इज योर एक्सेस इनकम? एक्सेस इनकम इज 489. सो दे गेट 489 का 9.09%, 489 का 91%. सो 489 को आप सिर्फ रिकैलकुलेट करोगे, 4401 है वो पूरा का पूरा कॉमन शेयर होल्डर्स को चला जाएगा. Currently it's 100%, so we did entire 4890. So this particular amount will keep on changing as per the participation percentages.
So they won't get the whole 10%.
No, they won't get. 10% is a participation. Participation मतलब वो खुद participate करेंगे along with common shareholders.
Okay. I finished it.
चलिए आगे चलते हैं. I think there non-participating, which are your general preference shares, not going upon there. Now these are the features on the preference shares. So when a liquidation happens, then preference shares generally get a first preference to the asset of the company. Also इसी वजह से उनका डिस्क्लोजर भी ऊपर की साइड होता है. And you can have a convertible preference shares. These are the preference shares which can get converted into the common stock in future. We see this during the EPS calculation. And you have a redeemable preference share. रिडीमेबल प्रेफरेंस शेयर का मतलब क्या होता है कि आज आपने पैसा लिया है प्रेफरेंस शेयर होल्डर से, फ्यूचर में आप उनको पैसा वापस करोगे, आपके शेयर्स कैंसल आउट करोगे, तो उसको बोलते हैं कॉलेबल या रिडीमेबल प्रेफरेंस शेयर. So callable preference shares may be called or redeemed or repurchased at a specific date. The aggregate or the or the per share amount at which the preference stock is callable must be disclosed in the balance sheet. तो हमने यहाँ पर डिस्क्लोजर्स देखे थे. इफ द शेयर इज अ रिडीमेबल प्रेफरेंस शेयर, तो यहाँ पर आपको एक और लाइन ऐड करनी पड़ेगी कॉमा करके, रिडीमेबल आफ्टर 5 years एट पार वैल्यू, so that a further disclosure is required.
In
Last
redeemable,
set,
they get a common stock.
नो दे गेट अ कैश बैक. अगर उनको कॉमन स्टॉक मिलेगा तो इट इज कॉल्ड कन्वर्टेबल प्रेफरेंस शेयर. यहाँ पर उनको मैंडेटरीली कैश पेमेंट आप वापस करोगे.
Okay.
The last one, very important. The word is mandatorily redeemable preference share. MCQ में हर बार आएगा. What is this? ये preference shares है, but these are not preference shares from the accounting point of view. इसको आप as a liability treat करोगे. Why? Because as per law, these are mandatorily payable back to the shareholder. It means it has created a liability in the nature. Even though ये shares है, लेकिन इनका जो nuance है, that is just like a bond or a loan or a debenture, which means you have to give it back on a particular date as per the legal agreement. तो इसको हम लोग रिप्रेजेंट करेंगे एज अ लायबिलिटी, नॉट एज अ प्रेफरेंस शेयर. So mandatorily redeemable preference share is issued with a maturity date. Similar to that, mandatorily redeemable preference stock must be bought back by the company on the maturity date. And because of this particular feature, mandatorily redeemable preference stock must be classified as a liability unless the redemption is required only in the event of dissolution of the company. डिसोल्यूशन होगा तो डेफिनेटली आप सब कुछ चीज वापस करोगे, कॉमन शेयर्स को, प्रेफरेंस शेयर्स को, सबको. लेकिन other than the liquidation of the company, if a preference stock has to be redeemed because of a legal agreement on a particular date, then it is called a mandatorily redeemable preference share and has to be shown as a liability. Very, very small concept, but an important concept.
So it won't be shown in the equity section.
Yes, it won't be shown on the equity section. It will be shown under the non-current liability section.
Okay.
चलिए, एग्जाम्पल नंबर 1 ओवर टू यू. कैलकुलेशन रिजल्ट्स मत देखना. यू हैव टू कैलकुलेट पार्टिसिपेटिंग डिस्ट्रीब्यूशन. कितना मिलेगा प्रेफरेंस को, कितना मिलेगा कॉमन शेयर होल्डर्स को. सो एग्जाम्पल नंबर 1 ओवर टू यू.
I got 56,800 for common shareholders and 44,200 for preferred shareholders.
No, so answer is not matching. So let's see कि कहाँ पर चीजें गलत हो सकती है. Have you removed the dividend for year one also?
40,000, sorry, 20,000 for 1 year, so 40,000 for both.
Okay, so your income which is available for the distribution is 61,000. यहाँ तक आपका आंसर मैच हो रहा है.
जी.
ठीक है. नाउ व्हाट नेक्स्ट यू हैव टू सी कि आपको एप्पल टू एप्पल पहले लेकर आना है कॉमन स्टॉक होल्डर्स को. तो जो प्रेफरेंस शेयर होल्डर्स है उनको 8% डिविडेंड मिला है, तो कॉमन शेयर्स वालों को भी पहले हम 8% दे देंगे. So they have a 1 lakh number of share into 5, that comes to $5 lakh into 8%, that's 40,000 of dividend. तो 40,000 हम उनको पहले दे देंगे. Now what is the excess earning? It's 21,000. This 21,000 of excess earnings needs to be distributed between common share and preference share in the ratio of amount invested. अब किसने कितना अमाउंट इन्वेस्ट किया है? Equity share has invested 1 lakh share into 5 lakh dollars they have invested. Preference shareholders, how much they have invested? 25,000 share into $10. So that comes to 2 lakh 50,000. So this
Okay,
21,000
I calculated
hmm,
in the ratio by the number of shares, not the total
you
value.
have to calculate in the ratio of amount invested. So what we are saying, what is the ratio of amount as per the par value? $25,000 for preference shares, 5 lakh dollar for the common share, and then 21,000 needs to be distributed accordingly.
Okay.
All right, एक बार quickly PPT देख लेते हैं and then we'll move to the next topic. I think the same things we will now jump very quickly. Let's say a common stock, you have a right to vote, you have the right in the earnings of the company, you have a residual right on liquidation. It means सबको सब कुछ मिल जाएगा, उसके बाद जो बचेगा that is for the common shareholders. It is called a residual right. Preemptive right का मतलब होता है कि they have a preference right. For example, let's say X Incorporation, you are the shareholder, 100% shareholder. Now, let's say X, your incorporation is planning to acquire the another company, and because of that, your shareholding can go down. So you may have a preemptive rights where you have a option to purchase the new shares in advance to make sure your shareholding percentage remains untouched. So that is called a preemptive right. It means an advance right. You get a better right compared to other people to purchase the stock to make sure your weightage in the company remains the same.
Preferred stock
And
won't get a preemptive right.
no, it's only for equity share. These are the features only for the common shareholders. Now, what are the different type of preference shares? We saw cumulative, we saw non-cumulative, we saw participating, we saw non-participating, we saw convertible, and then mandatorily redeemable. Again, which is mandatorily redeemable hai, then it has to be classified as a liability. चलिए next slide पे चलते हैं. I think this is the one example which you have just resolved right now. So this is the participating dividends question. Let's take a break 10 minutes, maybe 7:15 around. Let's start with a further topic which are on the epic side. So now I'm going to see you in next 10 to 12 minutes of time.
Okay.
चलिए शुरू करते हैं वापस. If you are back,
Mm.
let's start with EPIC, a small concept of EPIC. So EPIC का मतलब क्या है? All already we have seen. If we are issuing the stock above par, it will be going to EPIC. There is a small stock dividend. Maybe we will be covering this tomorrow. So it will be going to the EPIC. We will understand what is small stock dividend. If it's a donated stock, again it goes to the EPIC. We will understand tomorrow. If there is a liquidating dividend, we will understand this again tomorrow. So various type of EPIC adjustments. Liquidating EPIC is nothing but you are giving back, you are canceling out your equity. How EPIC is reduced, we will understand tomorrow. Treasury stock, we are just starting in a minute. You can have a forfeited subscription. The subscriber did not pay full money. You cancel out their shares, you did not refund the money back. So it is credited to your EPIC. If there is any conversion of the bond, and let's say bond holders are now issued the equity share, and those equity shares are issued above the par value, then the above par value will go towards the EPIC. And if you are issuing the shares on a discount, then EPIC will be debited. It's called a contra EPIC or a negative EPIC. So various type of the items which are going inside the EPIC. Then you have a format for the retained earnings. So this is how you will prepare a typical roll forward or a format. You will start with a beginning retained earnings plus any adjustments, opening retained earning adjustments. You get a adjusted opening retained earnings plus any net income or a loss minus any dividend which is paid plus or minus any prior period adjustments. This typically goes on the top end side and you get adjusted retained earnings. Any retrospective accounting change again goes on the top, you get any adjusted beginning retained earnings. So beginning retained earnings plus adjustments plus net income minus dividend, you get a ending retained earnings. Now appropriations of retained earnings. So it means how you reclassify your general reserve or retained earnings into a various category. So it could be a legal appropriation, which are mandatorily taken by the law. For example, a redeemable bond, you are supposed to reclassify the amount every year for the future redemption. So it could be a legal appropriation. It could be a contractual appropriation. So let's say you have taken a 100 million loan from the Bank of America, and Bank of America requires you to reclassify $25 million every year for their repayment from the general reserve. So it may not be a legal requirement, but it's a contractual requirement. Or it could be a voluntarily as per management plan. So let's say management wants to purchase a property plant in future, they want to do expansion, they have a future plan, and every year 10% they are setting aside for their future plan. So the appropriations can be legal, can be contractual, or can be discretionary. Again, let's go back to the presentation. We saw a various type of retained earnings in the first presentation, where let's go to the balance sheet. So we saw retained earnings for general contingency, retained earnings for the future inventory decline, retained earnings for the property plant, retained earnings for the replacement of the fixed assets. Anything which is not appropriated will become unappropriated retained earnings or unappropriated reserves and surplus. एक बार क्विकली देख लेते हैं वॉट एवर टू टॉपिक्स वी हैव कवर्ड सो फार. सो एपिक हम लोग पूरा कवर करेंगे कल. वी हैव अ फुल चैप्टर आफ्टर दिस विच इज एपिक. We will understand how treasury stocks are treated, how liquidating dividends are treated, how conversion treated, how small stocks are treated. So all the topic in detail tomorrow's session. Retained earning formula, you have a opening retained earnings plus accounting changes retrospectively. We did in basics of accounting. Prior period changes we have not done yet, but these are similar to what we have done changes in accounting policy. Plus net income minus dividends gives you a closing retained earnings. Now, retained earnings can be appropriated either for legal reason, contractual reason, or a voluntary discretionary reason. Entry remains the same. You debit retained earnings, you credit retained earnings, just a classification changes. So suppose you have $1,000 of total retained earnings, out of which you want to set aside $200 towards the future fixed asset. So your entry will be unappropriated retained earnings debit to appropriated retained earnings. Just a classification within the same head gets changed. Total amount remains the same. कोई क्वेश्चन यहाँ तक 4.1 4.2?
No.
Accumulated other comprehensive income we already covered in the last session, which is your PACE, pace adjustments. So same things we have coming into a repeat. We don't have in slide, so I'm also going to skip OCI. All the OCI transfers to the balance sheet. You have a beginning OCI plus addition to the OCI minus reclassification to net income gives you the closing accumulated OCI into your balance sheet. Now, if you have no questions, we are starting with a one example of treasury stock. A one method we will be able to capture today. Second method and the next chapter will be due tomorrow along with your exam doubts. And this will end your FAR 1 entire topic. If no questions, let's straight away jump to the treasury stock concepts. चले treasury stock पे?
Yeah.
ठीक है. Treasury stock means a stock which is bought back by the company. Now, treasury stock, you have two methods which are allowed by the accounting standard. Number one, cost method. Number two, par value method. 95% of the companies uses the cost method as it's easy to maintain. 5% of the company maintains the par value method or a stated value method. We will see stated value, par value tomorrow. End results are the same. So there is no change in the balance sheet or income statement or a financial statement. Total is the same. It's just a different routes how you approach to the destination. So let's start with a treasury stock with a cost method. So let's take an example which is given in the book, and side by side, let's understand in a Google sheet that how a treasury stock is going to impact your accounting. So let's ignore par value right now. So I'm just hiding all these things. So under a cost method, important thing, they are carried at acquisition cost. So whatever cost company is paying to repurchase the share, at that particular cost you record all the transactions. What is the timing of स्टॉक गेटिंग रिवर्स्ड? सो मैंने आपको एक चीज और बोली थी कि जो भी अकाउंट्स आप ओपन करते हो वो अकाउंट आपको क्लोज करना पड़ता है अकाउंटिंग में. सो व्हेन यू बाय द ट्रेजरी शेयर्स, either you reissue them or you cancel them or retire them. So the timing could be you have taken the shares back, it is in your balance sheet. Now you will either reissue them share or retire or cancel those particular share. So there are a lot of things which are involved from a cost point of view. So all these transactions are recorded at cost. Let's understand the entry. We have a same example which is there in your book. One by one करके entries को देखते जाते हैं. So first one, original. A company issued 10,000 number of share at $10 par value for $15. मतलब आपका par value है 10, आपने issue किया 15 पे. Now आज की slide का पहला concept, your common stock is always recorded at a par value. So you have a cash coming in. So $10,000 into 15, $1,50,000. Two common stock at par. So common stock are $10,000 into 10, which becomes $1,000. Remaining $5 per share is your EPIC common stock. So your entry is cash account debit to common stock to EPIC paid in capital common stock $50,000. We have the similar entry here. Cash account debit $1,50,000 to common stock $100,000 to EPIC $50,000. So this is the entry for original share. There is no concept we have started for treasury stock yet. Now what happens? A company has buy back the above issue price. तो company ने जो 10,000 share issue किए थे market में, 200 shares they are taking back at $20 per share. So buyback, this is called a treasury share or a buyback of the share. Now we are under a cost method. So under cost method, a buyback of the share is recorded at cost. So आपने जब 200 शेयर को वापस ले लिए, what is the cost you incurred? So as a company, you incurred a cost of $4,000. How? 200 शेयर, हर शेयर होल्डर को आपने $20 पे किए, so you have incurred a $4,000 of the cost. So your entry is now treasury stock account debited to cash $4,000. You record the transaction at a cost, and this is the only change between both the methods, par value and cost value method. Rest of the accounting almost flows in the similar fashion. So very important in MCQ in simulation, when you are using a cost method, all the buybacks are recorded at a cost price. So 200 share into $20, $4,000 is recorded as a treasury stock at cost.
You got cut off.
Can you hear me now?
Yes.
Okay. So only the change which we have from the treasury stock cost method versus par value method is how you record the buyback. So under cost method, it is recorded at a cost, actual cost. It doesn't matter what was your par value, what was your issue price, nothing matters. Jitna company ne cost incur kiya, you have to record the value at a same amount. So you paid $4,000, so 200 share into $20 per share, $4,000 are recorded as a cost of treasury stock. The entry is treasury stock debit to cash credit. यहाँ तक कोई भी डाउट स्पेसिफिकली इन दिस पर्टिकुलर एंट्री, यू हैव एनी डाउट?
Mm.
चलिए, नाउ व्हाट आर द पॉसिबिलिटीज? जो आपने 200 शेयर बायबैक किए हैं, या तो आप उनको री इश्यू करोगे, या तो आप उनको रिटायर करके कैंसिल आउट करोगे. सो लेट्स सी व्हाट कंपनी इज डूइंग. दिस इज वेरी इंपॉर्टेंट. वी आर रिकॉर्डिंग द थिंग्स एट अ कॉस्ट. नाउ व्हाट कंपनी इज डूइंग? Company is reissuing 100 share for $20 which were sold for $22. तो ये जो 200 शेयर बायबैक किए थे, ये 200 शेयर में से 100 शेयर कंपनी इज री इशूइंग अगेन फॉर $22. नाउ आपका एंट्री क्या रहेगा? आपको पैसा कितना मिल रहा है? 100 शेयर इंटू 22. सो कैश अकाउंट डेबिटेड 2200 टू ट्रेजरी स्टॉक टू एपिक. अब ट्रेजरी स्टॉक आपको कैसे रिकॉर्ड करना है? Because you recorded the buyback at a cost of $20, when you reissue, you will also use a cost method. So when you issue the treasury stock now, you issue them at a $20 and not the par value of $10. Again, this is a change. So what we are saying, you have taken the treasury stock at cost. So when you reissue the treasury stock, again you have to record the transaction at a cost. Why I'm highlighting E column? Only these points will get changed in the par value method. Rest of the example will remain the same. तो आपने बायबैक किया वो भी कॉस्ट पे, आपने बायबैक के बाद उसको री इश्यू किया वो भी कॉस्ट पे. So you get $2,200, which is your cash account debited to treasury stock. What is the treasury stock value? 100 shares into $20, which was your cost. तो आपको $200 का फायदा हुआ. That is your epic treasury stock. This is your balancing figure. Now let's understand logically क्या हुआ. आपने जब शेयर्स वापस लिए तो आपने $20 का खर्चा किया, लेकिन आपने जब इसको री इश्यू किए तो आपको $200 का गेन हुआ. So anything in excess of the par value of treasury stock, that is recorded as a epic treasury stock. These 2 points are important. यहाँ पर आपके सिमुलेशन एमसीक्यू आंसर्स यहाँ पर चेंज होते रहेंगे. ऑल क्लियर यहाँ तक की एंट्री? हाउ 100 शेयर्स आर री इश्यूड?
Yes.
चलिए नेक्स्ट. बाकी के जो 100 शेयर्स अब थे, सो यू हैड अ 200 शेयर, यू इश्यूड 100, नाउ यू हैव अ रिमेनिंग 100 शेयर. नाउ आपके जो रिमेनिंग 100 शेयर है वो आपने $13 में सिर्फ सेल आउट कर दिए. आपने लिए थे $20 में, लेकिन आपने सेल आउट किए $13 में. सो देयर इज अ लॉस ऑफ $700. एंट्री क्या रहेगी? आपको कैश कितना मिल रहा है? 100 इंटू 13 विच इज $1,300. सो कैश अकाउंट डेबिटेड हमारी पहली एंट्री विच इज $1,300. दिस इज योर फर्स्ट एंट्री. सेकेंड, आपको ट्रेजरी स्टॉक जो है वो तो आपको कॉस्ट पे क्लोज करना है. आपका कॉस्ट कितना था? $20. सो ट्रेजरी स्टॉक क्रेडिटेड 100 into 20 which is $2,000. So we have figured out this entry, cash account debited. We have figured out this entry to treasury stock 100 into 20. अब होता क्या है कि इफ देयर इज अ लॉस इन्वॉल्व, तो आपको देखना है कि पहले एपिक में क्या कोई बैलेंस है कि नहीं है. एंड दिस इज द थंब रूल फॉर एंटायर अकाउंटिंग, नॉट ओनली फॉर दिस मेथड. If you are incurring any losses in the accounting, especially in the equity section, all the losses are first debited to epic. If epic has no balance left, then the balancing figure is debited from the retained earnings. तो अगर लॉस है तो फर्स्ट प्रेफरेंस इज एपिक. एपिक में भी बैलेंस नहीं है, then you go to a retained earnings. Now if we see this entire transactions of buyback, we can see we have a $200 of epic balance available with us. So first the 700 loss is adjusted in the epic treasury stock up to $200. So which was your epic balance. Now what loss is remaining? $500 is unadjusted loss. So this is debited to your retained earnings. Again, a MCQ can come up, that what is the value of epic to be debited, what is the value of retained earnings to be debited. Again हमने क्या किया ये particular example में, we had 100 shares जो हमने $13 पे रीइश्यू किए. So we had a loss of $7. नाउ हमको कैश मिला 1300 का, वी डेबिटेड कैश. हमें ट्रेजरी स्टॉक तो हमेशा हमेशा कॉस्ट पे ही क्लोज करना है. सो वी क्लोज अवर ट्रेजरी स्टॉक एट $2000. रहा $700 का लॉस. ये लॉस एडजस्ट कैसे करना है? फर्स्ट चेकआउट इफ देयर इज एनी एपिक ट्रेजरी स्टॉक अवेलेबल और नॉट. सो वी हैड $200 ऑफ एपिक अवेलेबल इन द ट्रेजरी स्टॉक. तो पहले हमने $200 को एडजस्ट किया. Remaining 500 are now adjusted from the retained earnings. Does this example help you to understand how a cost method is used?
Yes.
Chaliye, let's do one thing. Let me create a one example for you. Give me 2 minutes and I want you to practice this
Um,
method.
I have a question. There are two Epic accounts in
Epic
this.
common stock is not used because common stock you are not cancelling out. So Epic common stock will be used when you retire your common stock. So again, you use Epic which are only relevant for your transactions. So for a buyback, Epic treasury stock is relevant. So you check whether Epic treasury has the balance or not. Okay, give me 5 minutes. I'm just creating one example for you and then you can prepare. All right, I'm sharing the screen again and over to you. Take 5 to 7 minutes of time. अब आपके हिसाब से इसको resolve करो. Epic treasury stock, you have to prepare the journal entry. One more concept वापस चलता है which we covered in the morning but शायद इतना highlight नहीं हुआ होगा, which was the presentation and disclosure part. So हम लोग disclose कैसे करते हैं treasury stock को? We reduce it from the common stock. So if you see here the last line item, cost of treasury stock is reduced. So you have to prepare journal entries plus you have to prepare what is the total amount of equity that will be presented in the balance sheet. So this is the sheet available with you. So go on. You can prepare the solution here only here itself. I think I can give you the access if you don't have. And you can prepare a solution here. Over to you. After 5 minutes, we will resolve this example.
Which sheet?
The far I just sent a link to you. In the third tab, treasury stock example. Okay, first entry is perfect. You have taken back 5,000 shares at 15 cost. Share entry is treasury stock account debited to cash $75,000. So perfect. Now, first transaction, out of 5,000 shares, you are reissuing 2,000 shares for $18. You can refer to the second tab. Treasury stock is recorded at what value in cost method?
At cost.
Okay, so debit cash 36,000. What is the cost of this 2,000 share?
15.
15 into 2,000 becomes 30,000.
Yes.
So you have to credit treasury stock 30,000, and the remaining will be Epic treasury stock, which is 6,000. Now the next one, you have issued the share at a loss, which is at $12. So how much money you are getting? What is the amount of cash to be debited?
12,000.
12,000. Credit treasury stock. Treasury stock is credited at what value?
15,000.
Why 15,000?
We bought it at 15,000.
Always it is recorded at cost. So cost of treasury stock is $15. So whether you debit, you credit, it's always at a cost. So now you have a loss of 3,000. How the loss will be adjusted? Why
By
you have used treasury stock Epic?
because first we have to reduce the Epic account.
Yes, so you have a $6,000 balance available. So you use $6,000 to right, knock off the loss. Suppose you had a treasury stock balance available of only $1,000, then first epic of 1,000 will be adjusted, remaining 2,000 would be adjusted against your retained earnings. So perfect with the entries. Now let's quickly just understand how presentation and disclosure happens under the cost method. So let me just say a cost method, presentation and disclosure. So you always start with your common stock, you add your epic, then you had your any retained earnings, and then you have a less, you have a treasury stock. Under cost method, it is going to be under cost, or under par value method, it will be under your par value. So par value, we are not focused right now. What is your common stock which you have issued? You have issued $50,000 of common stock. At what value you have issued? At 10. We don't know whether it was issued above par or not. So let's assume it was issued at a par value.
We won't consider treasury stock in this. We'll common.
I'm coming to that. Epic. Let's say we have a multiple epic. So let's put one more. So we have an epic for common stock, but we don't have a detail, so it's a 0. Let's say we have now epic for treasury stock. What is treasury stock? You had a 6,000 balance initially, you adjusted 3,000, so 3,000 is your remaining epic for your treasury stock. Retained earnings, the question is giving you $200,000. Now what is
Uh,
the remaining?
uh,
Sorry, come again.
uh, is my first entry wrong? There would be epic for common stock.
No, why this is your buyback entry. So you have taken back the stock, you always debit a treasury stock. Common stock you don't touch unless you retire them. So common stock you only touch when you retire it or cancel it. Otherwise you don't touch it. We have an example we will see tomorrow. What happens when you retire a common stock? ठीक है. So what we are saying, common stock you issued. Side by side देखते रहते हैं presentation. Why I'm focusing a lot on presentation? Because it can come into a simulation. Let's just go on the top. The balance sheet format we saw in the morning. यहाँ पर
Where
हमने देखा था you start
can you share
always.
your screen?
Oh, sorry, it is not shared. I'm so sorry. I thought I was sharing the screen. Let's go to your balance sheet format. What we always start with a capital stock which is issued, which is outstanding. Any treasury stock we reduce from the bottom of the equity section, not on the top. So first we show whatever is issued 100% minus what is there in a treasury stock. So this is how your presentation will look like. You have a common stock which is issued at a 500,000, 50,000 number of share into 10. You don't have any epic for common stock, so it's 0. What is your epic for treasury stock? You have a 6,000 minus 3,000 becomes your 3,000. What is your retained earnings? Question says 200,000. Now, what is your treasury stock with you left, which is neither reissued nor retired or cancelled? So you have purchased 5,000 shares back, out of which 3,000 are reissued. So you still have 2,000 treasury stock which are outstanding. Now, these are always recorded at cost under the cost method. So what are the number of share? 2,000 number of share. What is the cost per share? 15. So $30,000 is the value of your treasury stock. So what is the net common equity you represent in your balance sheet? This is going to be your sum of all these items, which is 673,000.
We would call 15 par value.
15 cost, not par value. Par is 10. 15 is
Oh,
a cost method. So under
okay.
treasury, हाँ जी
Yeah,
बोलिए.
in your formula you mentioned cost method divided by par value.
Under cost under cost method. So your cost of buyback is $15.
No, the above tab less treasury stock cost.
Cost or a par value. So par value we will do tomorrow. So same example
Okay.
we will see tomorrow and how your presentation changes. Your end value still remains 673, but there will be a certain changes in few of the line. So par value we will compare it tomorrow.
Okay.
चलिए तो जो एग्जाम्पल हमने अभी देखा था लेट्स गो अगेन, उसका एक बार प्रेजेंटेशन बनाने का ट्राई करते हैं. लेट्स सी व्हाट दे हैव गिवन इन द बुक और दे हैव नॉट गिवन. अगर दिया है तो कंपेयर करते हैं. So they have not given directly, but let's say they have another example. What is a balance sheet presentation? Here they have assumed a 200 shares are not reissued yet. तो एक बार एग्जाम्पल पे वापस आते हैं. व्हाट वी सॉ, हमने इनिशियली इश्यू किए थे 10,000 शेयर एंड वी बॉट बैक 200 शेयर. वी री इश्यूड 100 शेयर, अगेन वी री इश्यूड 100 शेयर. But in this particular disclosure point of view, we are assuming that shares are not reissued yet. तो हमारा प्रेजेंटेशन कैसे रहेगा कॉस्ट मेथड में? सबसे पहले कॉमन स्टॉक एट पार वैल्यू. व्हाट इज द कॉमन स्टॉक वैल्यू? इट इज $100,000 coming from this particular line item. $100,000. What is your APIC for common stock? $50,000 coming from here. $50,000. Total paid in capital. Retained earnings, let's see in the example above, was there any retained earnings given to us? So no retained earnings is given to us. So I think they must have assumed the retained earnings. So we will also assume there was a some balance of retained earnings they have presented here. This is the most important line for our presentation purpose. Less treasury stock at cost. We have bought back 200 share at $20 each. So treasury stock at cost was $4,000. So your net stockholder equity is 2,25,000 minus $4,000. This becomes $2,21,000. So this is how you present and disclose under the cost method. कल देखेंगे हम लोग पार वैल्यू मेथड. इफ यू सी द टोटल इज द सेम, हाउएवर इफ यू सी आपका एपिक चेंज हो चुका है. ट्रेजरी स्टॉक ऊपर जा चुका है. यहाँ पर ट्रेजरी स्टॉक लास्ट में है, यहाँ पर ट्रेजरी स्टॉक ऊपर जा चुका है. So there are certain internal changes we will do in par value method, but your end result will still remain the same. Also कल हम लोग देखेंगे जब रिटायर करते हैं rather than reissue, तो रिटायरमेंट के ऊपर क्या इसकी इम्पैक्ट आती है. एंड देन दिस चैप्टर विल बी ओवर. कल हम लोग इसी का सेकंड पार्ट देखेंगे. दिस इज वेरी वेरी सिंपल पार्ट, अ बेसिक जर्नल एंट्रीज. यहाँ पर हमें फोकस करना है स्टॉक डिविडेंड्स पे, which are our small dividends versus this is the small dividend and then a large dividend. Rest all the topic is pretty simple. So we should be able to close your entire FAR 1 by tomorrow. क्विकली देख लेते हैं कि हमने FAR 1 में क्या किया. We saw formatting of balance sheet, income statement, OCI. We saw SEC reporting plus EPS. Today we saw a little bit of stockholders equity cost method. Tomorrow we will see a par value method, cancellation, and then some basic concepts of how accounting happens, especially for small dividends and large dividends. And then by this, FAR 1 will be over. Next Saturday, Sunday, you will be expected to have a full FAR 1 exam. ठीक है, so we will call it a day. कोई भी क्वेश्चन हो, you can come back to me. I'll check your evaluation. I'll give my feedback shortly. कुछ भी डाउट्स है क्वेश्चन पेपर में तो हम लोग कल उसको गो थ्रू कर लेंगे.
Okay.
चलिए, ऑल राइट, हैव अ गुड डे, बाय. मिलते हैं कल. चलो.